Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest news updates for Sofi Technologies, MULN Automotive, Tesla, as well as Amazon. So for more news updates on any of these companies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. We're going to start off going over the latest updates for Sofi Technologies and their SOFI stock. We'll be analyzing an article which goes over the largest companies that are shorting and betting against Sofi Technologies. So essentially they are betting on the stock price falling for this company throughout the year of 2023. Sofi Technologies is essentially a digital bank and their share price trades for $5.44, although investors as well as professionals believe the company could surge up to $7.33 during the year of 2023. The financial sector was hit very hard during the year of 2022, but some investors are very optimistic about where the Sofi Technologies share price could go in 2023, hopefully beating the performance which they gave to us last year. Overall, bullish investors believe this stock could make a powerful comeback. However, Sofi's critics think this company could fall even further, which could be as low as around $3 per share. According to various 13F filings from the U.S. Securities and Exchange Commission, we will use this information to look at Sofi Technologies' short-selling interest, or rather institutions that believe that the Sofi share price will actually fall during the year of 2023. And we have some very large institutions betting against Sofi stock, such as Parallax Volatility Advisors, Capital Markets Trading UK, Jane Street Group, Citadel Advisors, and Simplex Trading. These are very large institutions. However, it seems that investors should think for themselves and not necessarily just follow what larger institutions are doing, because there are large institutions that are betting for Sofi Technologies over the long term. On top of that, with all of the short interest, potentially the company could undergo a short squeeze, which would cause the share price to sporadically increase very rapidly and dramatically in price on short notice. However, it would be wise for you not to have larger than a 5% allocation to this company, and by all means do not have any margin in your account during the current environment due to the overall macroeconomic economy being quite negative as of right now, because you don't want your broker to demand that you pay more money into your account to keep your overall margin above the maintenance. And I'm not a huge fan of margin investing anyway. But at any given point, the Federal Reserve could announce a more accommodating monetary policy, or at least an easier policy, which could cause the share price of Sofi Technologies as well as other stocks to increase. And many professionals believe this could happen during the year of 2023, but most likely by the end of the year. Another catalyst that's coming up for Sofi Technologies is their earnings report, which will take place on January 30th of 2023, which will be reviewing their quarter 4 financial results of 2022 as well as their full year financial results for 2022. And many people believe that this is going to be a positive catalyst for the overall company. Hopefully, Sofi Technologies could beat Wall Street's expectations and projections for their various revenue and EPS estimates. Overall, this would be a very positive development for Sofi Technologies, which could potentially cause the Sofi share price to rally due to this surprising optimism that we are experiencing in the stock. But even if the share price does fall to around $3 per share, and those large institutions that are betting on the company's share price falling, that is still technically good news, because who wouldn't want to buy a phenomenal company for even cheaper by around $3 per share? Now, if the company does fall to around $3 per share, it's most likely that the management of the company will issue a reverse stock split, which would then increase the overall price by lowering the amount of overall shares. But we will see what happens to Sofi stock in the future. Investors need to understand that an investment in Sofi Technologies was never a short-term investment meant for quick returns. Normally, very disruptive companies and technologically advanced companies such as Sofi Technologies are long-term plays that take anywhere from 5 to 10 years to really show their true colors, and not just a few months. So for investors who wanted a quick return on this company, clearly they have invested into the wrong company. This is a long-term play, And if you're not willing to hold this company through volatility or for the long term, then this company may not be the company for you. However, overall, I have around a 4% allocation to this company, and I don't intend to increase this company more than a 5% initial allocation or even add to this position until the share price falls down to between $3 to $4. Then I will add more, capping out at around 5%. And then after that, I'm just going to leave the stock and see what it does over the long term. But I would love to hear your thoughts about this company and how you believe they will perform in their Q4 earnings results, which will be released on January 30th. The next company we're going to talk about is Tesla's TSLA shares and where analysts believe the company could head in the future. Some analysts are very bullish and positive, and some are quite negative. For instance, if we look at a JP Morgan analyst who's named Adam Jonas, actually reiterated an overweight rating for the Tesla TSLA shares to a price target of around $250 for the next 12 months. And this is very good because normally people are cutting their overall ratings for Tesla considering how their current share price is falling pretty dramatically. And if you're not familiar with my last video, I said if Tesla dropped below $100 per share, then I'm going to start buying it up. But until then, I'm just going to sit and wait, because if it doesn't drop below $100 per share, then I'm not going to be averaging down my average cost basis, and that's what I really want to do for this particular company. Many investors in Tesla are not excited that Tesla is actually cutting the overall prices of their electric vehicles. So they are selling their electric vehicles at a cheaper price point, thus lowering their overall margins and lowering their overall revenues. However, because Tesla is a market leader, this is forcing their competitors and competition to also cut their overall electric vehicle prices as well, which would include Rivian Automotive, Lucid, as well as Fisker. Because when the market leader cuts their prices to stay competitive, the competition also has to cut their prices, which would lower their margins as well. So we could see a huge discount coming for the entire EV space. The analyst says, and I quote, "As Tesla takes an increasingly aggressive lead on price reductions, the competition must now also cut price or face a significant reduction in market share, if not an outright decline in absolute volume." And he is 100% correct. They either risk not cutting their share prices but then losing demand, or they can cut their share price, which will lower their overall margins. So it's really what's the lesser of the two evils here, and in my opinion, it would be to cut the prices. However, with Tesla's strong balance sheet and their amazing technology and overall market leadership, the company still has a phenomenal competitive advantage, and Tesla is going to be a long-term electric vehicle winner in my personal opinion. So overall, I am still very bullish on Tesla. I will continue to watch it, especially if it drops below $100 per share, and that's when I'm going to start nibbling at this company. And if it falls even further, I'm just going to double and triple down on it, because over the long term, this company is set to be one of the most successful companies that has ever entered the stock market. I do believe they can return to that $1 trillion valuation. The current share price for Tesla is trading at just $122 right now. So if this analyst is correct or even slightly correct with a $250 price prediction or price target, this company is primed for absolute growth once the economy starts to become more positive. So overall, I am still very bullish on Tesla. But now let's talk about another electric vehicle company called MULN Automotive, ticker symbol MULN, which trades for just 35 cents per share. MULN Automotive is a startup electric vehicle company, ticker symbol MULN, and social media was absolutely buzzing as Bollinger Motors opened up various job openings to hire employees. MULN is an EV and electric vehicle specialist, and this has caused more investors to take interest into MULN. So as Bollinger Motors actually starts to hire employees and get manufacturing underway, this ultimately reflects very positively on MULN. Right now, MULN is just specializing on their MULN 5 electric vehicle, but they're also trying to infiltrate the sports utility truck market, which they are doing under the guise of Bollinger Motors. On paper, MULN is investing heavily into its commercial fleet, which has come apparent with their various investments into Bollinger Motors, like we said earlier. And if we look at the market in general, we can see that many high-profile enterprises are looking to electrify their overall fleet of vehicles, which MULN is trying to get contracts with these various various enterprises so MULN can manufacture and deliver electric vehicles so their fleet can be 100% electric. So this overall narrative could pan out very well for MULN Automotive and their overall share price. However, for me personally, I don't own any shares of this company. I think it's far too risky as of right now to own this company, and I would much rather wait for this company to prove themselves before I invest into them. That's just the smarter, wiser, and a more risk-tolerant view of this overall company. Even Capital.com highlights that MULN doesn't have the greatest financial profile, and it says, and I quote, "MULN is a pre-revenue startup in a relatively young market. The company's liquidity is limited and its timeline to deliver its first vehicles and generate revenues is quite far in the future. This means that its ability to stay afloat until it starts bringing money in is questionable." Essentially, the author is saying this company does not have an impressive financial profile. We don't know if they're going to stay in business long enough to where they're actually manufacturing and delivering these vehicles, and as of right now, we don't know if their business model necessarily works. That's why investors should approach this stock with a high degree of uncertainty and a grain of salt, because we don't know where the MULN share price is going in the future, which means investors should approach this investment with extreme caution. Again, I don't advocate for this company, I don't own this company, however, I am willing to change my mind in this company once they prove themselves, either when they start to deliver vehicles, when they start making profits, or if they just show that their business model works. But until they do that, I'm going to remain skeptical on this overall company, but of course I would love to hear your thoughts down below. Something that's really skeptical about this company that I found out as of late is that MULN still hasn't filed their Form 10-K, and essentially this is just a finance form or a financial form that gives investors insights to what the company is doing and how strong they are financially and where they are putting their overall money. And this is somewhat concerning because originally MULN had until December 29th of 2022 to release their 10-K form so they can release their financials to the SEC, which is the Securities and Exchange Commission, and also investors can look at this form as well to see where MULN is financially. However, then MULN filed for it to be extended by a 15-day grace period, preferably to January 13th. However, that deadline has already came and passed, and they still have not released their 10-K form, which has made investors very skeptical. It's interesting how they don't want some investors to see their overall 10-K form, but eventually it will come out. So I'm very interested to look further into that to show investors that this company is not necessarily financially impressive as of right now. So again, approach this with a line of caution, if you will. The next company we're going to be talking about and dissecting as well as analyzing today is Amazon, one of my top investments. So it begs the question, Amazon stock, just like Tesla stock, is falling in their share price, but is it a good buying opportunity right now? Amazon is an absolutely gigantic e-commerce company that also specializes in cloud computing. Right now, their AMZN shares trade for $98 per share, while professionals believe the company could surge up to $136 over the next 12 months. Amazon stock has had very encouraging signs, but we've also seen many signs of warning from a macroeconomic perspective. For instance, the company has had logistical bottlenecks, the economy has very high inflation right now, rising interest rates, and the US dollar are all creating a whirlwind of problems for Amazon. Also, their AWS cloud platform is slowing in their overall growth, and we could be approaching a very negative recession, which will cause the consumer sentiment to be lower. But I would remind you, and this author does remind you, of what Charlie Munger has said, and he says, if you are going to be in this game for the long pull, which is the way to do it, you better be able to handle a 50% decline without fussing too much about it. And I 100% agree with him. If you are invested into a fundamentally solid company, then there's no reason why you wouldn't buy the same company at a cheaper price. For instance, if the AMZN shares fell to around $50 per share, why wouldn't you want to buy more of this company? Because it's the same company, just substantially cheaper. The author of this article gives us a fantastic word picture and a mental image by saying, and I quote, if Amazon were a ship at sea, it would have been hit by a hurricane, cyclone, and whirlpool, then lurched into port only to find that a tsunami is heading right for it. Essentially, he's saying that the macroeconomic environment is beating up and beating down the share price for Amazon, but for investors like like me who are long-term, this gives us a better buying opportunity. And just like Charlie Munger has said, if you can't stomach a 50% decline, then probably you have the wrong mindset going into it. Amazon overall is still extremely strong. They are one of the world's leading cloud services provider. They have more than 200 million Prime subscribers, and they have a phenomenal business in their overall subsidiaries as well as their overall e-commerce platform. So for long-term investors who can handle the short-term volatility, which would be an investor like me, I personally am accumulating more Amazon stock as of right now, particularly because the price is just getting cheaper and cheaper. So why wouldn't I want to buy such a fantastic company for as cheap as I possibly can? But what about their overall layoffs, and what do professionals think about this? Well, there's a lot to like about Amazon stock in general, and the company is coming off of a rather hard year, and on top of that, they announced that they're going to be laying off between 10,000 to 18,000 employees. Nevertheless, though, Amazon is still heading in the right direction, according to analysts. Amazon right now has a workforce of over 300,000, so laying off 10 to 18,000 is really not that much of a problem for them, and honestly, I think it's going to be very good to see them cut some of their workforce and lean out. This is going to save them a lot of money, particularly in regards to their future earnings reports. So overall, this company looks absolutely primed for future growth. Nevertheless, Amazon Web Services is still set to boost its overall growth in the future. So the key to Amazon's success in 2023 is going to be due to not only their retail business, but also their ever-growing Amazon Web Services platform, which is going to bring in the majority of their overall growth. An analyst, which is quoted in the article, even says, "Is the Fed going to continue to increase rates, and by how much? I think once we get some visibility into the cost of capital, where rates are going, that's when investors can start to pick their heads up and think about what the back half of 2023 and 2024 looks like," end quote. So overall, he's saying that until we get some clarity from the Federal Reserve and how they anticipate to approach overall inflation and increasing interest rates, once that cloud blows over, this company is primed for future growth and could surge as soon as that comes out, which could notably happen at the end of 2023 or beginning of 2024. So you have a small window of opportunity to buy Amazon stock while it's cheap. But again, I would love to hear your thoughts down below on Amazon or any of these companies. Go and smash that like button for more news updates on SoFi, MULN, Tesla, and Amazon. Subscribe if you are new, and I will see you in the next YT video.